Happy Wednesday. We welcome you to Trading Growth and Value Stocks. My name is James Boyd. Alongside me, my good friend Ben Watson. And we'd like to welcome him. And Ben does make me pay for a friend membership, but I think we're still friends. A little fun there, Ben. And also remember, we got Speak Truth, Life in the Fast Lane, Will, Rick, Mark, many others. Welcome to all. Now let's go ahead and hop right in. Am I wearing the green shirt here today? Maybe not. I did frame that green shirt before. Maybe that was the bottom when we actually wore that for 5 straight days. We'll have to go back and actually look on the videos to see exactly where the chart was. But after 5 days of that green shirt, finally had to put that one to rest. And maybe we'll pull it out eventually. Okay, now a little fun with you on asking about the green shirt. So just real quick as we get started, want to give us some quick heads up. The information here is provided for general informational purposes only. Should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Now, some of the things we'll talk about, some might have more of an income component to it, some might be more value-based, some might be more growth-based. We'll talk about that and how we can identify that and those setups. Also remember that Schwab does not recommend the use of technical analysis as a sole means of research. We want to have an understanding, we're investors, okay? This is not buying a ticker symbol. Behind the ticker symbol is a company, and the investor is trying to understand what the company does. Is it actually improving or not improving? And actually, where does that company stand relative to its peers? And does it have some competitive advantages? Okay. And are those competitive advantages turning into cash? So really, we're just kind of analytical in terms of being an investor. We want to know what the investor might be considering in buying. I think most people would want to know. That's why we have this class. Now, also remember that we'll use the paper money software, paper money, Thinkorswim software application. There's also web-based and mobile as well. Be aware of that. Remember, when we talk about stocks that have dividends, that does not mean these are not fixed income, okay? Anything that pays a dividend could change the dividend. Cut it completely, cut it some, could raise it, whatever. Dividends, they're paying dividends currently. That could change. Now, also remember that investing in stocks involves risk, including loss of principal. Now, quick reminder that coming up, Ben and Kevin Horner will actually be doing a workshop, an in-person event in Denver at the Gaylord Rockies, and that's May 2nd and 3rd. And that sounds close by, because it is. It's Friday and Saturday. Now, you can also go to schwab.com/events if you want to see the whole entire calendar. And the first day, okay, is technical analysis, and the second day is option strategies. Ben will also be doing an event right here in Anaheim. That's the Advanced Concept Workshop, and that's May 30th and 31st at the Anaheim Marriott, and also a one-day event in Miami, okay? Now, the nice thing is when you learn, whether you read something, you watch a video, recorded or live, or in person, different ways to absorb information, you learn differently, okay? And I like to actually do all types of learning, okay? And I learn differently from different types of settings as well. That's why we want to kind of have different formats to help it penetrate as much as possible, and that way we can learn how you want to learn. So join Ben and Kevin on this Friday and Saturday and or other events by going to schwab.com/events. Now, the goal of today's session is I really want to kind of talk about some investing themes right now. Now, when we talk about these investing themes, we'll talk about where the current market is, okay? And I want to kind of talk about what are some potential setups in the marketplace. Now, I want to also make mention, you can follow Ben and myself on X. Notice, for example, if you go to like mine, James Boyd CS, Ben, if you could put your handle in there, just capital J, capital B, right? Same thing on Ben Watson, CS. Follow us there. Ben does actually post frequently. And I want to kind of just show you just real quick. Occasionally, we have a couple things that might be maybe a little humorous, okay? Now, I got a lot of funny comments on this one. Let me kind of read this because some people glossed over this, okay? Bears running as indexes breach resistance, asking for a friend, not a recommendation. So I posted this yesterday, and some of you thought I was poking the bear, keyword poking, Okay, now let's kind of talk about this for just a moment. Okay, speaking of, let's say, kind of where the markets are. Now, this morning, we actually had the print on GDP. They were expecting, what, 0.4%? They only got, they were negative 0.3%. And also some other numbers on top of that that weren't that great. Now, here's my comment. Did anyone think they were going to be great? I don't think anyone thought they were going to be great. They were worse than what we thought, okay? And what you're going to notice is when you take a look at the SPX, the market sold off and it got down below. These are the same lines that we're looking at each day. I'm not redrawing. These are the same lines. We actually got down to 54.32, okay? And the significance of the 54.32 is, okay, when you look at these old highs like that one, this one, and you look at where we broke out. I'm just going to circle this day, really kind of being the first time that we maybe got above that. What you're now going to notice is the intraday low went pretty much right down to where the old breakout was. Now, I had a couple questions on, does every time when the market breaks out or the stock breaks out, does it have to pull back to where it broke out from? The answer is no. If it doesn't, just showing more momentum at that point in time. Could we say, okay, that maybe today was that intraday bounce, and that bounce on old resistance, I'll label that as R, is this now turning into the new potential S for support? Calling all technicians, okay? I'm calling them technician as well, okay? Ben, I need your help here. Would you actually say on this that maybe this old resistance is turning into new support? Some of you are saying, James, got to get a lifeline, okay? Just give me one of them. Now, if we look at kind of what happened, the Dow was down, what, 700 points, maybe 800 points. By the end of the day, look where we ended. We actually ended up near that 78.6%. And then if you take a look at this, that low, and let me kind of point to it, that low was also the 61.8% line that we talked about for 2 weeks. So someone obviously was seeing that. I tried to close my blinds this morning. That way those other technicians couldn't see our lines. Okay, joke there, okay? But someone was watching that level and someone bought. Even though the market was down in that, I don't know, 2% range, someone bought when the candles were red in the short term. So moral of the story is we're not looking at where things are intraday and trading intraday. We're looking at the daily candles. Interesting day in terms of where it was and where it closed. And now what you're going to see is the significance of this. This is where the gap down was, right? There's the gap down. Well, if you look at the candle today and where we've been the last 2 days, we're pretty much filling in the gap. Now, calling all technicians, again, pick up the phone. Now, what you're going to now notice is if we can get above this 55.78, which ain't higher, much higher than where we are right now, this would be your classic fill in the gap. That means that all this selling and all this fear, okay, well, someone sold at lows and the price about a month later was higher than where it was before. Now, we've seen this lesson about 500 times, okay? Where things break support, they make a fresh new lower low. There's a lot of fear and unknown, a lot of kind of fog. You can't see what's going on. Negativity, okay? People so feeling like they're right. That doesn't really matter, okay? We're looking at what the chart is doing, and it's kind of filling in the hole irregardless of what someone thinks, okay? So it's just kind of interesting, okay? And that's why we labeled yesterday, you trade in the charts or you trade in the feelings, okay? Now, some people like, James, but I think this is going to go down. We're just looking at the chart, okay? Someone's buying, pushing it right back up, gets higher than 55.78. That means it filled in the hole, okay? And here's what the kind of interesting thing is. Outside one country, we haven't heard anything in terms of any tariff deals at all outside yesterday. Maybe one of them. And we don't even know, like, is that for sure, okay? So it's kind of interesting how this has really played out so far. Now, I want to kind of get to work here. Now, the one thing I want to kind of say is when the market was down this morning, gold wasn't even up. You didn't see the yen up, or if it was barely up. You didn't see really the Swiss franc up. If it was up, it was barely up. And the other thing is you saw the VIX up about maybe, 2 points or so, and then it faded, okay, which wasn't really a whole lot on the VIX. My point in saying that is when the market was really down, those areas where people hid before, you didn't really see a lot of investors thrusting into those areas, which would lead us to wonder, are people just kind of using the points in volatility as a way to try to get back into equities and not some of those fear areas? Okay, now, when we take a quick look at, let's say, the NASDAQ, now that's kind of worth talking through, okay? When you look at the NASDAQ, we could actually say that in the short term, we actually closed higher than where we did yesterday, fell down just like the S&P. The one thing we would say on the S&P, the NASDAQ, second day in a row, we've really got above the 78.6% retracement, okay? Now, when we pull up the Dow, if we look at this, if we kind of said, look, which index did the best job in terms of holding the 20-period moving average, which is rising? The answer is the Dow Jones, okay, of the three that we talked about. That's the one where it went down to the moving average, near it, and then someone bought and then rammed it right back up. Now, remember what we said yesterday? There's a lot of charts that look like in the short term they're an ascending triangle, or there's something that looks like a symmetrical triangle, okay? Now, is it normal after sell-offs you get ascending triangles? No, okay, it's not. Normally they're after upward trends, but if you're getting a reversal, we just call those W-type patterns. Now, I know some of you just say, oh my God, say it again. I love it when you say the tilted up W pattern on top of that. Well, hey, calm down, okay? Everything's just about probability. So when you look at this, we're just kind of seeing a low, we're seeing a higher low, and then lately, if we're looking at this area, the last higher low is probably right around, let's say, 395-ish. So overall, we're trying to get a little poke right above that 406. So when you look at the Dow, you look at the S&P, you look at the NASDAQ, they're a little stronger, okay? Now, we might say things like, well, I'm just worried or concerned, and, the bottom line is, that's all nice and dandy, but you tend to get discounts and prices when there's fear, okay? Let me say that again. You tend to get discounts and prices when there's fear. So you want a lower price, but how do you get actually that? How do you get the prices to go down? You got to get unknowns, okay? And so a lot of people get focused on the fear part and they forget the potential opportunity. Speaking of potential opportunity, what I want to do is kind of just take a look at a couple stocks. And I want to kind of start just real quick. Let's look in the Dow together, okay, for just a moment. So our focus here is to talk about investing themes, okay? So what I want to do is, if a couple stocks, and if you don't mind, I'm going to kind of put a list together for us, maybe on the left-hand side for just a moment, okay? And I'm just going to kind of write the Dow Jones. And so when we end this session, I want to kind of maybe just kind of say, what are some stocks that we covered that maybe an investor might maybe just kind of watch and kind of see if they're showing a setup? Now, if you look at Mickey D, what you're now going to notice is it kind of really has those higher lows over time. What you're also going to notice is there's your horizontal resistance, and there's really your upward trending diagonal support, and you're now getting into what we call the apex. Now, a lot of people, they get very, 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 very concerned about earnings all the time. Not every company is going to be the same in terms of earnings volatility, okay? And there's strategies on how the investor could go over earnings without having an unlimited risk down to zero, okay? So that's important to understand. Now, if you look at Mickey D, I'm going to kind of put that right there, just kind of hold that. And that's one that's kind of maybe, is it trying to break out? Now, that's not just on the daily chart. You pull up, let's say, a 3-year weekly. This is what it's showing on a 3-year weekly, which has been quite strong. Now, the other one that we want to kind of keep our eyes on, if you look at Wally World, okay? Now, I want to kind of speak to someone who's an intermediate, longer-term investor, and they're looking for the moving averages. We would absolutely agree with you that this was not good, okay? That when we talk about an intermediate chart, seeing the moving averages red, okay, not great, okay? Now, if we're honest and we're just playing both ways, you can't call it bears to the downside, you can't, and then you don't count the upside. Remember when we talk about the 10-period moving average? Well, there's one. The second, we had a crossover, there's two. And if you look at the 20-period moving average going green, there's three, okay? Now, if you take a look at this, as of last week, you did actually see the candle. I mean, if we're looking for full confirmation, and what do I mean by that? Well, this is the earliest sign of maybe an investor might look for, but it's early. The crossover is having more confirmation, and really 3 is really the 20-period moving average, which lags, and it's really showing more confirmation. Irregardless of 1, 2, 3, showing less or more confirmation gives no guarantee that stock is going to go up. It's just a setup, okay? And what you're now going to see is the stock poked its head above about 96. We're sitting here about 97. So one of the stocks, if I pull this up back upon the daily chart, that is also a stock. This is what it looks like there. And what you're now going to see is it has some upside, maybe in the ballpark about, let's say 100, and then maybe even above 103. Now, if I say Walmart, what other companies would you think in terms of Walmart for just a moment? Well, some people might think about maybe like Costco, okay? Now, if you take a look at Costco for just a moment, is it bullish or bearish? Thoughts? Bullish or bearish? Okay? Bullish or bearish? Now, look kind of what's on the pattern that's on the chart, okay? You look at the pattern that's on the chart, it's the same type of idea, really horizontal resistance and really some higher lows. Now, what you're going to now notice is there's a gap, okay? And what you're going to notice is this gap right there. We're sitting here at 995, and what you're going to notice is that gap is 1026, okay? So if someone said, James, I am a bearish investor, and I'm looking for that 994 level to hold. Well, if a bear was maybe saying, James, I'm going to stay in that bearish as long as we stay below 994, I'm going to stay in the bearish position, okay? But if we get above the 994, if we break a level of resistance, the path of least resistance is likely going to go to the next level. And that could be caused from 2 points of view. Short investors covering their shorts, which we talked about, but it also could be new long investors that are A, adding to a position, or 3, they could just be entering a new position, okay? Now, when you look at, let's say, Walmart and Costco here, we would probably also think, let's say, stocks like maybe, what about Dollar General? Dollar General is grinding its way back to the upside, and if we look at that, that is a short-term high where many stocks are making fresh lows. So I'm going to kind of put a little Dollar General there, and if we say Dollar General, I probably would think about maybe something like Dollar Tree. What you're going to notice on Dollar Tree broke out, and so far you've actually had a little flag back so far. So some of these companies that are in the retail space, especially discount stores, they're seeing a little bid here. The bid's coming through Walmart and Costco, and even the ones that lag, that do not have as strong as a trend of Walmart and Costco, Dollar General and Dollar Tree, picking up a little bullish action here lately. The one that is still not showing any uptrend is still Target, okay? Now, so here's the point, okay? The point we're bringing out is we want to know where's the investing capital going, okay? Now, here's the deal. Let's just say that James L. and myself, we like to go bearish. Wonderful. Do James L. and myself represent the investing universe? Probably not, okay? Retirees, workers that are going into retirement, people that have 401k accounts, IRAs, things like that, many of them, even if they thought the market was going to go down, they don't have accounts that can go short, okay? And they might even not, also kind of with that, they might not even have the education to go short. So when you talk about people that do bearish, you're talking about like a niche group of investors, but not a mass scale typically. And that's what we have to understand, is that when we talk about large population of investors, there are people that tend to be long-only investors, okay? Welcome to the investing world, okay? We're not saying the stocks can't go down. We've talked about that. But you just got to remember, kind of viewpoint of 30 people is not the viewpoint of 300 million, okay? That might not even be able to go bearish, okay, in their accounts because they don't have the accounts to do it, okay? Now, the biggest thing is also I want to kind of bring out for just a moment, if we take a look at, let's say, something, by the way, I want to also include one more. some of you that are in Ohio, Ohio, okay, and you're also going to see that if you throw in Kentucky as well, Kroger, or as they would say down there, Kroger, okay? Well, you got also Kroger in there getting a little push. And by the way, it's had a push, okay? Now, some people might say comments, and they're odd comments because someone might say, these are boring stock. And I don't even know what that means. I think what they're saying is they want to get in something that goes up a lot, and then maybe if they complain that the stock goes down, then they say it's too volatile. Well, if you get into a stock and it goes up a lot, it could also go down a lot. It cuts both ways, okay? Some people want to just try to get in a trend and try to let that trend ride. It could just be a nice little potential ride to the upside. They just want to go for a ride on the trend, whether it's slow, medium, or fast. So I'm also going to include a little Kroger there as well, okay? Now, if we actually look at this, okay? Now, by the way, I want to kind of bring up something, okay? So when we go to the paper money account, you're going to notice that now the comment that James L says, talking about interest on margin loans, you also got to understand that not everyone uses margin, okay? If you ask most people, hey, do you ever trade on margin? They don't even know what you're talking about. They think the only money that I'm investing is what's in my account, okay? Again, you're talking about a niche group that even know what you're talking about. So again, this is where we have to have kind of full context of really what could be happening out there. In the paper money accounts we have 23,000 of the 31,000 available, okay? And if you actually take a look at, let's say, the IRA, we can't borrow more than what's in the account. If we did, then it would actually be rejected, okay? So the only account that could actually do that is the, quote, margin account. We could trade positions that are bigger than the account value to a point, okay? But what we try to do in this class is we don't show that. We're only going to trade what we have available, okay? Now, what I want to do just real quick is also kind of bring up some companies, and you're mentioning those in the chat. So Meta really had earnings, $5.49. That's where it closed. It was down a whopping not even 1%. Let's just say it was 1%. And then where it is in the after hours, it's sitting here about 568. Now, this does not mean this is where it's going to be in the morning, okay? It's not. Are there some people that trade in the after hours on the stock? Yeah, sure, okay? But the thing is, we don't know where this will be in the morning. Now, it could be significantly higher than where it is in the morning. It could be the same price or lower. But if we talk about now, where that bid and ask is now, it's at 571. Now, if we went back in and said, is there a position in here on Meta? The answer is yes, but it's not a stock position. But it is getting a little bump. Could that paper money portfolio benefit from that rise tomorrow? About ready to find out. The level that we actually saw on that chart before that we marked was 582 when we did the trade example. Now, the other one, let's kind of bring back up before we look at our paper trades, Microsoft. Now, Microsoft, okay, closed at 395, and it's at blasted 418. Now, again, this is where it's trading now. They're probably getting into the conference call right now. They could make some comments that could change the direction, completely push it back down to where it was. Meta was, or even lower, Meta was up 0.3%. The stock right now, this is after market, it's up $24. So, okay, so stop for just a moment. We talked about Meta, okay? We also talked about Microsoft. What does this affect? Let's say that these two stocks open tomorrow where we are. What effect does it have? Well, what effect it probably has is the NASDAQ maybe goes higher tomorrow, at least in the morning, okay? So if these stocks actually can hold where they are now, does the NASDAQ potentially open a little higher? Now, tomorrow, you actually got Amazon and Apple coming out. So there's other companies. But what you're now going to notice is, could that actually help the NASDAQ push its way higher? And also, could it also help, let's say, the VIX work its way lower? Now, I also want to kind of speak to two other companies that was kind of interesting, okay? One of the companies we talked about before, which was V, Okay, now V, if we look at this and we kind of, we're just being honest, we had a downward channel. What did V do today? Well, V broke to the upside. Well, there's a lot of people that will kind of say how, that's everything's so horrible out there. Well, I don't know. I mean, their numbers were 8% higher. Okay, you look at the estimate versus actual, they actually beat it, and it's just kind of interesting. I mean, you've got to be careful just kind of painting everything with the same brush and then not really doing the due diligence, okay? Because sometimes you kind of miss the things that are right in front of your face. And then it's like, why do we call ourselves technical analysis people if we're not even looking at the charts and the data, okay? So now, let's kind of go back to this, and let's kind of point this out. I'm going to kind of isolate V, okay? And also, the one that has earnings this afternoon is MA. Now, MA, we're not seeing any major reaction, but that was a pretty decent candle here today. We're going to have to see how that plays out on the earnings. But overall, those are not just completely falling apart, okay? Now, if we take a look at this, I want to also go back to a couple. When we started talking about some bullish trades, we kind of talked about some stocks that were related to a different asset class. And we named two stocks, PLTR, which has been a horse to the upside. It broke out. This is an example I want to bring out because there's questions today on, does the stock have to pull back to the breakout level? My answer to that is, did Palantir pull back after the breakout? The answer is absolutely not. And again, what does that tell us? There's more momentum than we think. What does that even mean? Well, if you don't get a pullback, there's probably more buyers than sellers at that time, and it might go up higher than you thought. Palantir may be also trying to get up to 123. We have that position. It's been a decent position. Going to see if it can go up a little bit more. The other one has been also MicroStrategy as well, and it's poked its way into 369, that area right there. Okay? Now, so I'm going to kind of write those. We got PLTR, MSTR. Those have actually been quite strong. I also want to kind of bring out just real quick two of the stocks that we've had in the paper money account that have been kind of a little interesting. Mo is actually held in there pretty well, okay? And you're going to see that PM, Philip Morris, okay? It's also hit a brand new high here today. Just kind of been a little grinder, okay? And interesting. Now, what I want to kind of do is I also want to take it just two more, and then we're going to look at trades. The other, and I'm talking about themes here, okay? When we take a look at O'Reilly Automotive, now what you're now going to notice is this has a little bit different pattern than some of the ones we've been looking at that have been more ascending triangle-ish like. And what you're now going to notice is, now remember, if you're a technician, you're looking at the patterns. And if someone said, well, how do I know the potential trend could be changing? Well, when you're inside the triangle, the symmetrical triangle, if the price doesn't break the line, the trend isn't changing. It's still neutral. But if the price gets above, okay, so yesterday we closed outside that line, and then today what you're going to notice is intraday, someone must have been buying intraday on old resistance, new support. When we say old resistance, new support, it doesn't have to pull back there for 2 to 3 days. Some investors might be trying to buy on an intraday bounce. Now, speaking of this, we're going to actually, now, by the way, when you think of O'Reilly's, okay, who else do you think about? Why might this, for example, be maybe getting a little action? Okay, now you got to think about something. If you kind of look at, let's say, people kind of talk about the economy, things like that. Well, people might not be willing, or they might not just, they don't want to, or they're not able to maybe buy the new cars, okay? Maybe they're trying to make their old car last, and they're buying used parts, or parts in general, and they're just trying to make do with what they have, okay? Now, if that's how you're kind of seeing the economy, you might say, well, which companies might benefit from that? Now, the flip of that, if everything was just rosy skies, okay, then maybe the people that are selling cars would be doing really, really well. But the opposite side of that stick is maybe everything's not great, and who might benefit from that scenario? Okay. So whether you think it's great or not great, think to yourself, who could benefit from that? Because usually there's businesses that are built for both sides of that stick. Okay. Now, what I want to do is let's take this example, and I'm going to pull up the last one, and we're going to spend the rest of the time doing trade examples on some of the examples we pulled up. When you look at AutoZone, it also is getting above a little short-term top right there, and we closed up above that. Now, if you're a bear, probably is not the greatest signs when you start to see those lower shadows, okay? Problem with the lower shadows, or tails, I should say, they're higher sequentially. Over time, they're moving higher, right? They're moving higher. And then today, you just got a higher high relative to these two spots right there. So if you make a higher high, path of least resistance is a higher high, okay? If you make a higher high, the highest likelihood is a higher low, okay? Now, what I'm going to do is let's go back to the paper money account. So what type of capital do we have in this account? Well, it's about 33, okay? Remaining. Let me show you the positions. So one thing that kind of makes these webcasts unique is we like to kind of like do sample trades, track a portfolio over time, etc. And what you're now going to notice is the this portfolio, which is just positions done in the webcast. This does not mean you have to do the same positions or strategies. It's just an example. So when I'm actually pointing to what I'm pointing to, we're just trying to show that really the portfolio is delta positive. And when I say delta positive, we're just meaning a bullish portfolio. That's all we mean by that, okay? So if you said, is this portfolio bullish or bearish? Well, if that number is actually positive, then it is there's more bullish positions than bearish positions, okay? Now, what I'm gonna do is I'm gonna pull this back up, and we're gonna go to that O'Reilly for just a second. Now, when we take a look at this and we pull this up, what we're gonna do is we're gonna take a bullish position on this breakout. Now, the position size that we've been really working with for about the last 4 months or so, 4 months in total, it's really been about $6,000, maybe $8,000 worth of capital. If we chose something in the middle, okay, and what I'm going to do is I'm going to right click on the ask, buy custom. I'm going to go with OCO bracket. We will put a target on this. And when we did this, or do this now, I'm going to click on the pool balls, okay? And if we said, hey, look, the capital size we're going to show in this is $7,000. Now, we've done this before. This is not the first time we've taken a higher price dollar stock, and then we've done is maybe just bought 5 or 6 or 7 shares. This is not the first time we've done this, okay? It's 4.94. We're just going to round up to 5 shares, okay? 5 shares. Now, what I'm going to do is I'm going to put the stop and the target on this. But before we do that, let's take a quick look in terms of its fundamentals to see where it's at. So when we actually pull this up, we go to analyze right there. We go to, let's say, fundamentals. And if we actually pull this up, we're now going to see some information about its fundamentals. Now, if you were a business owner, what would you want to see? Well, I think if you're a business owner, you would say, well, duh, James. Okay. Well, I mean, you could tell me that. Okay. You'd want to see sales per share rising. So that's actually saying your revenue is going up, and we're assuming the number of shares you have is staying the same. But so if the shares are staying the same and the sales per share are rising, that's telling us that revenue is increasing, okay? Now, that's not a bad problem to have. The investor might say, geez, there's other things that could be worse. Now, what you're going to notice is you want to know, is that revenue, after expenses and other things, is it dropping down into profitability? Well, if you look at earnings per share, which is just net income, okay, over the number of shares outstanding, 23, 31, 33, 38, 40, and so on. Now, the question that kind of gets asked now is, well, how do we know it's going to continue to go? We've hit that a number of times. We don't, okay? The whole idea is they might actually have some competitive advantages compared to their peers, and there also might be some economic conditions that is allowing that company to maybe stand out right now, which I think many people might say they might be in that position right now. Now, what I'm going to do is when we actually go back and look at this, I'm going to pull up, let's say, that chart, and I'm going to bring up that position. So if we looked at, let's say, a target level, okay? Now, some people might say, James, we just had a pullback, and especially if we're talking about setting targets. Many investors like to say, where did this stock start pulling back from? Where did it go down to? And they might say, James, I'm looking for a little upside that it might break that prior high. And they might be thinking, James, I'm thinking that maybe that stock might go to that 161% extension. Now, what you have to understand is these prior highs, the prior high, the prior high, if I kind of took those highs and went into the future, sometimes they can just kind of correlate with maybe close to the 161 extension, okay? So if I right click on it and say extend to the right, if I say, look, in this case, I mean, if we went straight up, where's the diagonal line? Well, the diagonal line's at 1484. But the problem with that is it's assuming the stock just goes straight up. But wonder if it takes some time to get there. Does that diagonal line ever kind of intersect with the 161.8%? The answer is, in this case, yes. If the investor said, James, I'm going to be bullish, but I'm extremely negative, or I'm pessimistic, I should say, okay? Let's say we put a number of, let's say, 1485. That's the white diagonal line. We're going to go dated GTC. Now, underneath us, some investors, they like to set stops underneath the moving averages. We're going to set that stop underneath, let's say, 1376, okay? Less 2%, and we're going to set it at 1348. Now, if I put it at 1348, you got to remember something is in a more volatile market, the investor might understand that and be willing to give stocks more breathing room, okay, from where the entry is down to the stop, to try to have a lesser chance of being stopped out, okay? And so you have to understand that that's what we're kind of doing there, trying to give a little bit more breathing room to try to let the trend play out and retest perhaps the moving average. There's the target price. What we're going to go ahead and do is confirm and send. We can now see the capital amount. There's not a commission to buy the shares. And now what we're going to go ahead and do is send. Now, question by Joseph. Tariffs or not, question is, are consumers buying parts or new cars? So let me just open that up to everyone, okay? Now, if you went and maybe bought a Ford, okay, like the last 2 weeks or so, they had employee pricing. So why is Ford doing employee pricing? Well, they might be doing employee pricing because maybe people aren't buying as many new cars and they're trying to actually get people to come in and buy a new car, okay? Maybe they have a lot of inventory that people just aren't buying. Usually businesses don't lower prices because they're selling like hotcakes. Do they? Maybe not. So if we go back and say tariffs or not, question is, are consumers buying parts or new cars? Well, let's kind of use the charts to kind of give us an idea of what they might be doing. We just went over AutoZone O'Reilly getting a little push to the upside. Let's bring up Ford, and you tell me if is there a breakout on Ford? Now, we would have to say that on Ford, is it a breakout? Just give me a yes or no. Would you say Ford is breaking out? Okay, is Ford breaking out? Just simple yes or no. If we go back to, let's say, GM, is GM breaking out? A simple yes or no. So in answering your question, Joseph, are consumers buying parts of new cars? Ford has gone back up, but I can't say it's broken out until we probably get up a little bit higher, probably need at least 1025. And if we went to GM and said, are they buying cars? Can't say that. It actually broke back down a little bit, okay? So it kind of appears people are buying a little bit more parts than cars, okay? Those new cars, okay? Now, that does not mean they're not buying any new cars. We're just kind of saying there might be a focus on actually running with what you got, okay? Now, the other thing I want to kind of bring up here is I want to also just bring up kind of some one of the things we've actually had is we've had some different countries back and forth kind of battling, arguing, is really data security. Okay. Now, if you look at Fortinet, I want to bring up three companies, and I want to kind of look, we're talking about investing themes. Okay. If you look at, let's say, Fortinet, FTNT, okay, here's where it is. And today was kind of like your classic, there's your horizontal line, right? Intraday fell back down near the moving average and the horizontal line, and then it got pushed back up. Now, remember, when you talk about go back to retest, it doesn't have to pull back and retest for 3, 4, or 5 days. It could even just do it intraday, okay? Now, if you look at, let's say, these three companies, example given, pull this up. When you look at Fortinet, they're really doing cybersecurity, convergence of networking, and security solutions. So there's Fortinet, okay? Now let me just come back to just real quick, another one. The other one is CRWD, okay? CrowdStrike. Now, if we look at this one and go to the same thing and say, what do they do? Well, cyber solutions, okay? They also do cloud deliver protection of endpoints, cloud workloads, and etc., and software, among other things, okay? So kind of sound a little similar. And then if we went to one more area and you look at Zscaler. Ben, what is Zscaler? Okay? Now, if you look at Zscaler, you're like, dead gum. It's a blasted new high. We go back to analyze for just a sec. We say, what does Zscaler do? Operates a cloud security, okay? Now, here's the thing. When everyone is so focused on kind of their feelings, you kind of maybe close yourself off, perhaps, to what are some investing themes out there. Now, here's three companies in cloud security, and these aren't even all of them. I'm just pulling up three of them. There seems to be a theme. Now, could it be the backdrop of some of the things that are happening in the world? You better believe it, okay? But the thing is that kind of the backdrop of what's happening in the world out there, maybe kind of creating potential investing opportunities? That's the idea, right? And by the way, could some of those things create maybe stocks that are going down? Sure, and we've talked about that 2 weeks ago. Now, what I'm going to do is I'm going to go back to just real quick the stock Fortinet, okay? So in the time that I have remaining, I'm going to right-click. I'm going to use Fortinet as an example, okay? Right-click, and what I'm going to do is I'm going to come down and I'm going to go to right-click on that. There it is. We're going to go buy custom with the OCO bracket. Now, when I pull this back up, we're going to use this prior high, which is right about 114, okay, and change. Now, if I put that about 114, okay, dated GTC right there, dated GTC right there. And what we're going to do is, a lot of people are going to say, look, I think this is support. Some might say, James, I'm going to set it even a little lower than that. I'm going to use about 99.80 for a horizontal support level. And if we did that, less 2%, as you can see, 97.80, okay? Now, a lot of people, they get really excited when they see something where the reward is high and the risk is low. That can be fabricated based upon how high you set a target, and it can be fabricated on how close you set a stop. I think more important than that, looking at reward to risk, it's important to kind of know what are the probabilities they can go up or down. And also, a part of that is what has the trend been? And also a part of that is there a theme of investors investing in the space and or industry group in general? 97.80, we're going to put it right there. Now, I'm out of my time here today, but what I want you to be kind of doing on a daily basis, probably every 2-3 days, I want you to be thinking to yourself, just like we did here today, what are some themes in investing? Where are there pockets of bullish strength, or where are there pockets of stocks that are maybe not doing well given some economic macro conditions? And it's okay to do both, because we know that every company is going to do well in every situation, okay? So that's what I want you to do, kind of on a daily basis, minimum every 2-3 days. What's the investing themes out there, okay? Now, I also want to kind of keep in mind, we just saw, for example, when we go back to just Meta for just a moment, want to see where it's at. I believe this was a little bit higher than where it was before. It's at 582. We're just asking, where does that open in the morning? Where does that actually lead the market in the morning? Okay, so about to see where that opens. But so far, getting a little push. If we actually also went back to, let's say, Microsoft, and you say, where's that? It's at 419, holding about where it was before. Could those actually help the market? Now, if the market's at that sensitive area, and if we get some of these bigger dollar mega cap stocks, if they could start to move back up, that might cause some of those institutional investors that might be sitting in cash to try to get back in. The major difference with when you look at a stock like Microsoft is it kind of has like an inverse head and shoulder or a major horizontal resistance line. And if that stock opens up here, that is a breakout of a basing pattern. Be careful who you listen to, okay? If someone's a technician, let's be a technician. But bringing up, let's say, just here's my comments, be careful, okay? Now, I'm out of my time here today. With what we talked about, remember that all investing has risk. Stay tuned for our next session coming up tomorrow morning. Join us also on our YouTube channel, Trading Talks with Schwab Coaching. This has been the class on trading growth and value stocks. Thank you so much. Have a great day. We'll see you back tomorrow. Bye-bye.